another thing, let me kind of go back when you're registering with the IRS. So if you're registering your business as a partnership, saying that it's more than one person, I just want you guys to keep in mind. So if you do have a partner and it's more than one person, when you go to open up your business bank account, both of those parties have to be there. So it can't be one person trying to go open up the business bank account unless your operating agreement reflects or says something different. And essentially, let me kind of break down what an operating agreement is. It's basically saying if it's just one person, like what kind of power or authority you have. You have the authority to go open a business, a bank account, or you can do this. Or if there's a partner, this person is 25% shareholder or own 25% of the company. This person owns 75 and she can do this and she can do that. It basically lays out how your business is ran, if that makes sense. But say if you do have a partner and you take the operating agreement in there and you take your information from the Secretary of State and they see that there's multiple people on that LLC, they may want all parties involved to come. Someone may ask you, well, we need to see the EIN letter from the IRS. So when you're registering the EIN online, you have the option for them to mail you that letter with your EIN, your name, your address, or you can just print it out. Print it out right there. Don't let them mail it. It takes 6 weeks if they mail it, but keep everything in a binder, keep it all together. So when you do have to go open a bank account, or you possibly going into these apartment complexes with like, okay, I'm going to sign a lease today, or I want to apply, have your stuff together because someone may ask for it. So operating agreements is something that you need anyhow.
So, okay, well, so you still want to make that note to make it like, okay, I got you. Second thing, $1,000 you can launch your business. That would be enough to launch your business, or you would want to launch your business more, or what?
So the least that I've seen is from apartment complexes when they're like, okay, we'll take a new business. And I'm like, okay, what does the bank account need to look like? A lot of times they want to just see that you can pay the rent, right? That you have something in the bank to actually pay the rent and pay it for a few months and they don't have to worry. Sometimes I ran into where they're like, okay, if you don't have a business credit score generating, you need to have 10 times the rent in the bank account. So it's like $10,000 or $15,000, depending on how much the rent is. But again, it's like different criteria. So it really depended on the actual apartment complex. And why I say have contracts and paperwork in place is because if you get audited, let's say 5 years from now, and they're like, oh, well, where did this money come from? Even though it's your business, you're creating the LLC, you just want to have paperwork and you want to have some type of paper trail so you don't get audited and they're like, oh, well, you wrote that off and you're commingling money, so have some type of proof that it was a loan. Because if for whatever reason, let's say the IRS audits you in 3 years from now and they determine that you're commingling money and all this stuff, they can disallow expenses that you wrote off in your business. Like if they do like a audit of your books, your bank accounts, and they see, oh, you don't have a business bank account, you've been running this money through your personal bank account, they can do what is called disallow you to use certain expenses. If you already have a business, when you go file your taxes, you can write off certain things. You can write off expenses for your supplies. You can write off educational costs, your accountant. Sometimes you can write off travel, airline tickets, meals. You can write off a lot of stuff. If the IRS deems or says that, they don't recognize, because your LLC, essentially, when you file your taxes with your LLC, you file it on your personal under something called a Schedule C. So essentially, it falls up under you, the person, but for whatever reason, if they audit you and they see like you're not keeping your books straight, you don't have everything separated, they don't recognize you as a business, they can disallow or take back they can go back several years and say, well, we're not going to allow you to use any of those as expenses, and basically regenerate your tax return and say you owe them all this money. So just in the beginning, just keep everything separate. It's your money, but your business is a separate person, a separate entity. It's a new baby that you create. It's a new person. So if you loan your business money, yes, have the paperwork and the contracts, because what happens is when you're like, okay, I put $5,000 in that business bank account and now you want it back. You can't just go take it. When you do move the money, you have to it can be, repayment of your loan. what were the terms that you broke down that you was gonna repay the loan, right? So you don't want to just look like you moving the money back and forth. Yeah, just have your paperwork, because the IRS, they've been backed up from COVID. Once they get all their staff, and they like to audit small business, okay? Once you make a certain amount of money, you just know you're gonna get audited at some point. It may not be this year, but in a few years they may send you some paperwork.
So what would the contract be for yourself to your business, yourself to your business?
So it'll be a promissory note. So you'll say that you are loaning your business, let's say it's $5,000. These are the payments in that contract. You're putting your name and you're loaning the business, the LLC name, and you're loaning this particular amount. You come up with the interest rate and the payment terms, like when will you actually pay it back? Is it a loan that you have to repay back the business have to repay in a year? Or is it 3 years? Like, come up with the terms, but have some actual paper trail.